One of our temporary accounts, or one of our adjustments that include a temporary account, is accrued income. This is an asset to the business because there's money owed to the business. Listen to the word, accrued income. Accrued income means income for this year, not received yet. That's why it is accrued. Accrued is always not received yet. The rent income for February, the last month of the financial year, was not received yet. They gave us the total amount received for rent income for the year amounts to 19,800 Rand. So on the credit side of, remember, it's not received yet. So on the credit side of our rent income, we put there on the last day of the year, February 28, a total. And the amount is 19,800. Now they can either only give you that amount and also tell you that the rent income for February was not received yet, or they can give you the amount of 1,800. What I mean is, like, they can take this out. Are you with me? What are you going to do now? You're going to take that 19,800 and you're going to divide it by 11. Why will you do that? Because there's 1 month that we didn't receive yet. A year has got 12 months. If there's 1 month that you didn't receive, then it means that there was 11 months that we received. And that gives you that 1,800 Rand per month. So if they don't give you the 1,800, then you can work it out yourself. If they gave you the 1,800, then you know what to do. The question is, are you going to add or subtract? Listen to the question. Are you going to add or subtract? Of course we are going to add. Why are we going to add? Because this is 11 months. We need another month so that the total can be 12 months. We've got 11 months there. We must add another month so that we can have 12 months. Because we didn't receive it yet, it is accrued income. GJ, the 1,800 Rand. On the debit side of accrued income is the last day of the year, February 28. Rent income. It's a GJ transaction, and that 1,800 Rand was not received yet. Let's go to the rent income. What is the amount that we are going to take to the profit and loss account? Of course, the 12 months. 21,600. 21,600 we are going to take to the profit and loss account. That is a closing transfer, 2019, February 28. Okay, remember, what did we do? If they gave you the 1,800 Rand, that's okay. If they don't give it to you, you take the total amount of 19,800, you divided it by 11 so that you can see what was the amount per month. That gives you 1,800. Are you going to add or subtract? Of course we are going to add, because we didn't receive it yet, and it was part of this year according to the matching principle, and this is an asset for the business. Remember, why is it an asset? Because there is money owed by somebody to the business, and if somebody owe you money, it's like a debtor, it is an asset. And that we are going to put in the note, in the balance sheet for trade and other receivables together with your debtors. There's a plus 1,800 in the assets because accrued income becomes more. And there's a plus 1,800 in the owner's equity because the rent income becomes more. And that is one of the temporary accounts. Your accrued income is one of the temporary accounts that we must do a reversal entry on the first day of the next financial year. Deferred income. Deferred income. Income for the next year already received. So we received in advance. We receive money in advance. Why is it a liability? Because we already received the money, we owe the service to the tenant. If it is rent income. Listen, they already pay us, for example, for the first month of the next year. So we owe them that service. And when you owe somebody something, it's a liability. Received 2,300 Rand from the tenant during February, the end of the financial year. It is an advance payment for March. There's your rent income. There we've got 2019, February 28. I also gave you the total there. It is total brought down 29,900. Receive from the tenant the amount for for March. This is an advance payment for March 2019. Remember, March 2019 is not part of our year. What if they take out that 2,300 Rand? What if they don't give it to you? Then you take this amount and you divided it by 13. Why 13? Because we've got our whole year, March, April, May, June, July, August, September, October, November, December, January, February, end of the year, and March. That's why we divided it by 13. 29,900 divided by 13 gives you 2,300 Rand per month. 2,300 Rand per month. Are we going to add or subtract? If you add, then you make the 13 months more. You are going to subtract. You're going to subtract. You're going to subtract 1 month that you paid in advance. Received in advance. 2019, February 28. Deferred income is the 2,300 Rand, that 1 month that we received in advance. And then on this side, 2019, February 28, rent income. 2,300 Rand. Okay, what are we going to do with the nominal account? We are going to close it off to the profit and loss as 29,900 minus 2,300. 29,900 minus 2,300 gives you 2,7,600. And that is equal to 12 months rent. 2,300 times 12 gives you 2,7,600. And that's what we want to do. What is this deferred income or income received in advance? This is a liability. Why is it a liability? Because we received money for something that we didn't produce yet, or that we didn't give the service yet. That's why this is a liability for the business. Accounting equation. Accounting equation. Your rent income become less. So if your income become less, then your owner's equity become less. Your deferred income is a liability, and we've got more deferred income. So we've got more liabilities. And this is also one of our temporary accounts that we must do a reversal entry the first day of the next year.